Hey there, people. How are ya? Hope you're doing great as always. It's your boy Ondrej here again. Welcome to the Financial Fortress. And today we are talking PLBY Group, ticker symbol PLBY. Here is the logo. And, I've already did quite a deep dive about this one, and I will put the link in one of the corners. It was a deep dive into like the presentation deck. It's about an hour long, looking more onto the qualitative side. But today I would like to talk more about the current valuation because last time we talked, that was in January, right? The price of PLBY was still falling, but now it's kind of stabilized itself over the past month, kind of oscillating around that $15 range, meaning that the market cap is about $650 million. So, in terms of market capitalization, pretty much a small cap with quite a huge upside potential. And, after that significant drop, basically 75% from the all time high, last year when all these growth stories were flying, we might actually be having a sensible valuation at this point. So let's take a little deeper look if PLBY is something that deserves our hard-earned dollars. Because obviously, if you will just leave your dollars, under the mattress or in the bank, they at this rate they will lose about half of its value in by the end of the decade. So we better put them to work. Let's take a look if PLBY could be an option. So, considering the PLBY group, well, Ben Cohn, as the current CEO of Playboy, after the unfortunate demise of Hugh Hefner, has a big plans for the company. He took PLBY public, raised a bunch of new capital, and went on to acquire synergetic businesses like Honey Birdette, Lovers, and Yandy.com. All of these are growing brands with significant upside potential, and if Ben can establish this ecosystem and reinvigorate Playboy brand, there is an opportunity for sizable capital appreciation for investors. Analysts expect the company to grow 43% this year. And if we take the Q3 revenue, which was 58 million, and extrapolate it on an annualized basis, we would get about 200 million in revenue, getting the price to sales ratio of only 3, which is relatively low for a company growing at such an impressive number. That being said, there are also two possible ways how the revenue can grow even faster than that. And first of that would be renegotiating some of the licensing deals. Hugh Hefner was not as business savvy and cared mostly about the brand legacy and the printed magazine itself. Uh, at the moment, there are over 3 billion of Playboy merchandise being sold all over the world, and the royalties are in the low 2% range. So you can kind of imagine you are having some kind of a t-shirts, fragrances, different kind of merchandise, right? You can slap that Playboy logo on anything, and usually royalties of that kind are somewhere in the 6 to 8% range. And currently, Ben's team is on the crusade to renegotiate some of those deals. And if successful, this could bring up to additional 120 million, again if successful, right? And that might not happen right, like this year. That's kind of the longer story. So let's kind of assume that they are able to renegotiate maybe some of the deals this year, some of the years after that, and slowly grew that revenue number. Second wildcard worth mentioning would be the centerfold. A couple months ago, PLBY soft launched their very own OnlyFans competitor with Cardi B as creative director and handful of high-profile creators essentially stolen from OnlyFans. And Centerfold is slowly building its audience and growing. If they can capture maybe like, let's say at the beginning, 25% of OnlyFans revenue, that would mean an additional 65 million in revenue for them without any significant expenses. And it's quite unfortunate that all the buzz about the company died out with its valuation being slash 75% from an all-time high in basically like Q1 2021, because everybody was talking about it when the market was hot, and now nobody wants a piece of growing businesses. And that's a shame. At this valuation, I would almost say that the downside is relatively limited. due to the steady flow of the royalties as well as all the revenue from the acquired brands. So there is definitely a certain floor to the stock price. And at the same time, all the wildcards are I have mentioned are, in my opinion, not really priced in at the moment. So in my book, this PLBY is relatively attractive investment for people looking for a bit more risk and people that won't mind the volatility that kind of comes with investing in high growth companies, where the profits might be choppy and it's still pretty much in kind of a story mode. So, what's your take? Let me know in the comments. Would you add PLBY to your portfolio? And if you like the video, smash all the buttons, like button, maybe the bell so you get the notification when the next video hits if you like this one. And hope to see you very soon. Take care.